Okay, so what does it mean when you see a number like $14.7 billion suddenly flagged as at risk, especially in crypto?
Yeah, that's a headline that definitely grabs your attention.
Yeah.
It means there's some serious tension building up.
A huge amount of weight just hanging there over Bitcoin specifically.
Exactly. It's not just theory, it's leveraged money. And it tells us exactly where the market's stress point is right now.
Right. So for this deep dive, we're going to cut through the noise of the morning market report. We want to pull out the key insights for you. We're focusing on three really distinct things happening. First, this huge leverage situation in Bitcoin we mentioned.
The $14.7 billion.
Yeah. Second, Ripple, XRP, making a big strategic move towards privacy. Kind of interesting.
Very interesting, yeah.
And third, a really specific date being targeted for a Shiba Inu rally. Like, down to the day.
Right. So we need to unpack that Bitcoin risk, figure out what Ripple's move really means for XRP's utility, and, well, understand the thinking behind that SHIB date.
Exactly. Give you the full picture, the volatility, the strategy, and that community stuff all working together.
Let's do it.
Okay, let's start with the big one. Bitcoin. That $14.7 billion stress point. The source material is super clear. That much money in Bitcoin longs.
So people betting the price goes up.
Right. Those bets are currently labeled at risk.
And it's not just the sheer size, though. I mean, $14.7 billion is obviously enormous. It's how it's at risk that matters.
And the how seems pinned to one specific price level they're trying to defend, right?
Yeah.
The report says BTC is holding right around $120,000.
Exactly. That 120K mark is critical. See, when we say longs at risk, we're mostly talking about leveraged positions.
Okay.
Traders put down only a fraction of the value, right, to amplify gains. But they need to keep a certain amount of collateral, the margin. If Bitcoin's price dips below $120,000, well, suddenly a lot of those positions don't meet the margin requirements anymore.
So 120K isn't just a line on a chart people watch. It's like a trigger for the derivatives market.
It's the tripwire, exactly.
Why $120K specifically? Why is so much risk piled up right there?
Well, looking back just before this report, that area just above 120K was where a lot of buying happened.
Okay.
So many traders who got in recently might have set their stop losses near there, or more importantly, that's the level where their leverage gets stretched to the absolute limit. What's fascinating here is just how concentrated the risk is. It's not spread out. It's like everyone leaned against the same single support beam.
Wow. Okay, so if that $120K beam breaks, what does the cascade look like, according to the sources, beyond just those traders losing money?
Right. It's the knock-on effect. The term is forced liquidation.
Okay.
The exchanges don't wait. They automatically sell the Bitcoin held as collateral for those contracts, all $14.7 billion worth, potentially to cover the losses.
And that's not like a slow trickle of selling.
No. It's fast, automated, a sudden flood of sell orders hitting the market all at once.
That sounds like guaranteed volatility, like a flash crash scenario.
It absolutely can be.
Sure.
And if that first wave of selling pushes the price down more, say it drops to $118,000, then the next group of leverage longs, the ones who had a bit more breathing room, suddenly they're underwater too. And they get liquidated.
Triggering even more selling.
Exactly. There's the potential downward spiral. This whole situation is basically a massive stress test for the derivatives market. It shows how much relies on holding that single price point.
So for you listening, understanding that mechanism, how stability is kind of balanced on that $120K knife edge is key right now.
Absolutely. If you're watching one thing, that's it.
Okay, that puts the risk into perspective. Now let's completely change gears from that immediate financial risk to longer-term strategic moves.
Right. Less about minute-by-minute price and more about underlying development.
And this is where Ripple comes in with XRP. The report says Ripple has, quote, revealed its XRP privacy roadmap.
Yeah, and that's a really interesting signal. Privacy for XRP.
It seems a bit counterintuitive, doesn't it? I mean, XRP's big focus has always been cross-border payments, institutional stuff, areas where you'd think transparency is paramount for regulators.
That's the immediate reaction, yeah. Why add privacy features that might make banks or regulators, nervous?
Exactly.
But if we connect this to the bigger picture, the sources sort of suggest this isn't about full anonymity, like, say, Monero. It's likely about optional confidentiality.
Optional. Okay, what does that achieve for them?
Well, a couple things, strategically. First, there's definitely growing demand, even from businesses, for more privacy in transactions. Think about supply chains, vendor payments, Companies don't necessarily want all that info public on a ledger.
Makes sense.
Second, it's about competition. You've got newer blockchains coming out, offering sophisticated privacy features, often using things like zero-knowledge proofs.
Right, ZK tech.
Yeah. So Ripple needs to keep pace to offer similar utility so XRP doesn't get left behind. They need to stay competitive against these, emerging solutions.
So maybe it's not about hiding everything, but shielding certain details of a transaction while still allowing verification if needed, like for regulators.
That seems like the most probable path. The roadmap likely includes integrating some ZK tech, maybe specialized side chains, something where users can choose more data masking if they need it.
Okay.
This lets them pitch XRP as efficient and fast, plus offering user-controlled confidentiality. That makes it look a lot better compared to old bank systems, which are, frankly, struggling with data protection.
So it's an adaptation, keeping XRP relevant in a market that's increasingly focused on privacy and regulatory compliance.
Exactly. It shows they're thinking long-term, beyond just today's price charts. It's about sustained relevance.
Which is a totally different vibe from the Bitcoin situation. Okay, third pillar for today. Let's swing over to the more speculative end of the spectrum. Shiba Inu, SHIB.
Right. From institutional strategy back to community dynamics and anticipation. It really shows the different facets of the market.
And the report here is incredibly specific. It doesn't just say SHIB might rally soon. It says SHIB is, quote, targeting an 11 October rally. That's what, next week?
Yeah. Naming the exact date like that is significant in the meme coin space. It's rarely accidental. It's a deliberate communication tactic.
What's the difference between saying soon and saying October 11th, strategically? I mean?
Soon is vague. It keeps interest simmering, maybe.
Yeah.
But October 11th, that creates a focal point, a deadline.
Okay.
For these coins that rely heavily on community and social buzz, coordinating activity is crucial for a rally. You need lots of people buying or holding around the same time. A specific date focuses everyone's attention, and importantly, it concentrates the FOMO. The fear of missing out.
Right, the FOMO.
It puts the pressure into a very tight window rather than letting excitement kind of fizzle out over weeks.
And based on the source, we don't know the exact thing planned for October 11th. Could be a token burn, some launch, a partnership, whatever.
Right, we don't have that detail.
But the date itself seems to be the main thing driving the chatter right now.
Precisely. Well, everyone waits for the what, the when. October 11th becomes its own catalyst. It's a rallying cry. Think of it like scheduling hype.
Haha, scheduling hype. I like that.
It aims to concentrate attention, trading volume, everything on that one day. And honestly, for many traders in this kind of asset, the anticipation, the run-up to the event, is often more important than whatever actually happens on the day. It's the belief mechanism that drives the price.
Fascinating. Okay, so let's try and weave these three threads together. Bitcoin risk, Ripple strategy, SHIB anticipation.
Yeah, they really do paint a picture of the whole ecosystem, don't they? You got the bedrock financial risk indicator, that huge $14.7 billion in Bitcoin longs, teetering on the 120K level, pure systemic stress.
High stakes.
Then in the middle, you've got that long-term institutional play.
Okay.
Ripple trying to enhance XRP's utility with privacy, aiming for survival and growth. That's strategic evolution.
Right, building for the future.
And then you have the other end, the fast-moving, community-powered speculation, all focused around a specific date like SHIB's October 11th target. That's momentum trading, pure and simple.
Risk management, strategic positioning, and coordinated speculation all happening at once.
Exactly.
So what does this all mean for you listening? Why track this specific mix of news today?
Well, because just watching one piece doesn't give you the full story. You need to see all three dimensions to really get a feel for the market.
Okay.
You got to watch the stability signs as that $120K level holding for Bitcoin. You need to track the strategic shifts. Is XRP genuinely making itself more useful long-term? And you need to understand these scheduled hype events. How are coins like SHIB manufacturing their own demand?
So it's about seeing the connections, how the leverage risk relates to maybe the need for more stable utility, and how speculation maybe feeds off both stability and instability.
Precisely. Combining those views gives you real context, not just reacting to the latest price alert on your phone.
That makes a lot of sense. Okay, quick recap then. Key things to watch. That massive $14.7 billion risk over Bitcoin longs anchored precariously at 120K.
Check.
Ripple making a strategic pivot with its XRP privacy roadmap, likely aiming for broader utility and competitiveness.
Yep.
And the Shiba Inu community zeroing in on October 11th, using a specific date to try and spark a rally.
Got it. Risk, strategy, and hype.
Okay, so to leave you with something to think about, building on that huge Bitcoin risk factor,
Or
given the sheer size of that $14.7 billion potentially hitting the sell side if 120K breaks, what's the secondary thing you should watch beyond just the Bitcoin price itself?
Ooh, good question.
Yeah.
Because that kind of forced selling doesn't happen in a vacuum, right? It's in shockwaves.
Exactly.
So do you immediately see money flee to safety? Like a huge rush into U.S. dollar stablecoins as people try to get out of the way?
Or maybe something else.
Or do you see a sudden explosion in activity elsewhere, like maybe in options markets or futures for other coins, as traders scramble to hedge against the fallout? Does the risk cascade, or does it get absorbed somewhere else?
Where does that pressure flow next?
Exactly. Watching those immediate ripple effects across the whole ecosystem when or if that Bitcoin level breaks. That's the next level of observation for anyone trying to stay truly informed.
A fantastic point to consider. Always look for the knock-on effects. Thanks for breaking down the sources with us today.
My pleasure. Always interesting stuff happening.